oil prices climbed to a 2-week high as geopolitical tensions between Iran and Western nations intensified. West Texas Intermediate, WTI, crude futures reached near $102.50 per barrel, a level not seen in weeks, as fears of supply disruptions in the Persian Gulf grew. Reports of heightened military activity and stalled nuclear negotiations have traders bracing for potential volatility. The Strait of Hormuz, a critical shipping route for about 20% of global oil exports, is now under closer scrutiny. Any disruption in this area could send shockwaves through the global oil market, especially given already tight supply conditions. The market's sensitivity to geopolitical developments is amplified by the current state of global oil inventories and limited spare production capacity. Analysts point out that even minor disruptions could have outsized effects on prices. The Biden administration's recent statements to Iran have further stoked concerns, with traders factoring in a higher risk premium. This has led to a noticeable shift in market sentiment, with buyers stepping in as WTI moves above the $100 threshold. From a technical standpoint, the price action is drawing attention to the $102, $50 103.00 range, a key resistance level. If the price can hold above $100, it may indicate stronger buying interest and a potential breakout. However, some analysts caution that the move could be overextended, especially with mixed signals about global demand and rising U.S. inventories. While OPEC Plus has maintained, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Production cuts, the broader economic outlook remains uncertain. The current situation highlights the fragile balance in the oil market. On one hand, geopolitical risks are pushing prices higher. On the other, economic data and inventory trends suggest a more cautious outlook. This duality is evident in the recent price movement, where both fear and fundamentals are at play. The market is now closely watching whether the geopolitical tension will translate into a sustained rally or if it will be short-lived amid broader economic headwinds. Investors are also keeping an eye on the technical indicators to gauge the strength of the current move. A sustained close above $102.50 could signal a shift in sentiment and attract more institutional buying. Conversely, a pullback below $100 could indicate that the rally is losing steam. The next key signal will be how the price reacts to this resistance zone and whether the geopolitical narrative continues to dominate market sentiment. The broader implications of this price movement extend beyond oil. Energy prices are closely linked to inflation and economic growth, so a prolonged rise in oil prices could have ripple effects across global markets. Central banks and governments are likely monitoring the situation closely, as any significant increase in energy costs could impact monetary policy and fiscal strategies. In the short term, the market is at a crossroads. The immediate focus is on whether the current rally can hold or if the underlying fundamentals will eventually pull the price back. The uncertainty surrounding Iran's actions, the potential for further military escalation, and the state of global demand are all factors that could influence the next move in oil prices. Traders are also weighing the impact of OPEC Plus production decisions and how they align with the current geopolitical climate. While the group has maintained production cuts, the effectiveness of these measures in stabilizing prices is being tested by external factors. Any unexpected change in OPEC Plus policy could add another layer of volatility to an already uncertain market. Looking ahead, the next key signal will be how the geopolitical situation evolves and whether most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The market can maintain its current momentum. A sustained rally above $102.50 would suggest that the fear of supply disruptions is outweighing the concerns about demand. Conversely, a failure to hold above this level could signal a shift in market sentiment and a return to more fundamental-driven trading. The current environment underscores the interconnectedness of global markets and the role of geopolitical events in shaping commodity prices. As the situation in the Persian Gulf remains fluid, investors and traders are advised to stay informed and prepared for potential volatility. The next few days will be crucial in determining whether the current price movement is a temporary spike or the start of a more sustained upward trend.